In this video, we're going to explore the Bitcoin let-in drip to BTC leverage opportunity and where I stand almost 1 month after taking out that initial loan. So stay tuned.
Feeling that meme coin FOMO kick in, like you missed out on Doge and SHIB and watching Trump soar to number 2? Don't miss your next shot at flipping the script. Flapjacks is more than a meme. It's deflationary, sticky, and community built with utility. Don't wait for FOMO to set in. Stack your gains now at flapjacks.xyz.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. The last week or so, we've seen Bitcoin just take a beating left and right, and broader crypto markets are not faring any better. Also getting smacked down left and right. And almost a month ago to the date of this video, give or take, I did this let-in borrowing strategy. So the video came out later. So it's probably been a month. This was on February 8th. So what this was trying to showing you guys how you can take loans out on your collateral. Now, it's not the way the billionaires play, because Michael Saylor gets a 0% interest loan and all this other kind of stuff. But this is a way to not sell your capital and be able to, buy something and leverage it. So again, think of it like taking out an equity line of credit on your house if you have a home or something like that. Now, there is risk involved because you are putting leverage, and leverage is the quickest way to get wrecked. But I think this is the safest option that's currently out there, and let-in has the best track record in the industry. Now, I want to show you the actual numbers so you can actually understand how this can work in your favor and how you can avoid it getting wrecked, because due to Bitcoin's volatility, you can still take an L on this. So if you're not familiar with the previous video and the way let-in works, you can basically, you deposit Bitcoin and they allow you 50% of that Bitcoin value at that price you deposited at to withdraw in cash and do whatever you want to with it. So out here, I originally deposited 0.025 and I was able to get out $1,189. And that was because around that time, Bitcoin was about 95,000 bucks. So what I did with that $1,000 is I went and purchased more Bitcoin at that 95K price. Now, the collateral I had, that was purchased around the 50 to 60K range, probably even lower because it was DCA. And I don't count that in the calculations that I'm going to show you. But basically, I took that 1,200 bucks and I was buying Bitcoin at 95K range, which is here on the charts. It was like February 8th or whatever, right? So somewhere around this range. That's important because remember, your loan is paid back in fiat. So you can really maximize this, especially because you have 12 months. So if you understand how leverage works and how collateralized lending works, you can maximize this and make some serious headway on stacking sats. But if you do it wrong, you can lose your money. So I got this, just broke this down into Excel much simpler. So here's the price that I had put the collateral up at. So remember, I purchased this BTC way before. So this was just, again, think of it like a loan, your car, or you got a Rolex, or you got something of some kind of collateral. So something that you've had and you accrued at a much cheaper price, or it was given you, whatever the case may be. So we don't count that in the kind of what we owe balance field. We're just looking at that as that's the collateral that we're putting up against it. So what I was able to get out, because Bitcoin at that particular day was at 95K, it gave me a value in US dollars of 2,378 bucks. Because that's 0.025 times the current price of Bitcoin at that particular time when I click submit. They gave me $1,189.36, which again, at that Bitcoin price, if we were at that price right now, it would cost me 0.0125 to pay that back. Now, let's pause there and look at this. Because we're not at that price right now, if I were to pay this back now, Bitcoin is currently at 83K, I have to pay back 0.014. So I would lose Bitcoin. So you don't want to do that. You want to take the loan. If you're going to do this, you want to leverage. You want to take leverage out at the bottom and then pay it back out at the top. So what I'm actually planning on doing is I purchased more Bitcoin on the dip between 85 to 80K. I think I got it. I had some buy orders in below 80, but that didn't trigger, unfortunately. So that is, I'm going to take that and actually do another Bitcoin loan with that collateral. But what I want to show you here is if I were to pay all that back, let's say we get back to 95K and I pay that back, I will have lost 0.001396 Bitcoin. Now remember, the name of the game is stacking sats. So this would lose me Bitcoin, and in fiat terms at that dollar price, that's $132 loss. So let's look at the next price target. Well, say at 100K, if I were to pay all that back, and that's of course depends on how long the interest plays out, but it won't take long for Bitcoin to hit these levels again. Then I would have lost 78. Let's jump all the way down to the 125 range. So if Bitcoin gets to 125K and I decide to pay my loan back and it's still within that 12-month time frame, I will have made $200, or I would have gained 0.00158912 Bitcoin. So I would have increased my BTC holdings by another 10%, and it wouldn't have cost me anything. I would have gotten an additional. So it's just like putting Bitcoin up with a savings account and drawing interest on it if you play this right. So that's only at 125K. Now that may seem far-fetched from here because that's another 50% from the current levels we're at. But if you're bullish on Bitcoin, then this can pay off in the long run. And if you catch Bitcoin on a dip, then you really can benefit from this. So that's why I said I'm going to put it together another probably 2,500 or so at this 80K price range and do another, maybe I'll do 5K. So do 5K and then take out 2,500. Now, the key to this is understanding where your liquidation is at. So if I don't pay this back and Bitcoin continues to drop, this is where I hit volatile range. 60K, I'm at risk. 80K, they take my Bitcoin. Or I'm sorry, 80% or 50, Bitcoin hitting 53K, we'll call it below 55K, I am liquidated. So that's why you have to understand the fundamentals of Bitcoin. You should have done your 100 hours of research and then make your decision based off of that. So I am quite confident in Bitcoin being able to maintain 60K and above for this cycle due to previous halving cycles and understanding the fundamentals of the Bitcoin halving and how that works. So we may come down even again to test those previous all-time high levels, and that puts 60K back on the table. But the smart thing to do at that stage is if that happens, you just accumulate or buy more Bitcoin at that price. You don't sit there panic. So right now, if you were to take this strategy, you don't sell the farm and leverage everything. You keep some capital on the side just in case you have to top up your loan so that you can buy the dip. Hence what I'm doing at this 80K range. I already have enough to pay off the loan at these prices. But as I just showed you with the numbers, that would be a stupid thing to do. So if I were to pay this back, I would be losing money because the value of the Bitcoin at today's price against the dollar has gone down. So I will wait. I would say probably within the next 3 to 4 months to pay this back, but I can always add additional collateral like I've already done to the balance. So if I want to extend this window further out, or at least give myself some more breathing room, like if I was worried, I could just deposit what I got sitting over here on Drip to BTC. Remember, this is the other half. I could put this over there on the platform, and then I have, you know, a 0.035 collateral or something like that, total collateral, and that would make my liquidation maybe around 47 or 48 or 45, somewhere in there. So I could do that, but I'm just going to leave that sitting there. That's the realized price. Oh, did want to bring that up because this helps you understand kind of where a floor price for Bitcoin is. So the realized price is the price at which Bitcoin last moved or sold from a wallet or from a purchase. And then this it kind of acts as support historically. So right now, the realized price of Bitcoin is 43K. and the actual price is 85K. That doesn't mean we go down and test these levels, but you can look through the chart and see that for the most part, it has held right in this range. So the actual price and realized price, and here it dipped below, here it slightly dipped below, and here as well, but it doesn't go that far below the price. We haven't seen that yet. I don't think 43 is on the table, but that would liquidate me. So if we got down to 60, I would just top up the loan that I got sitting here, as well as with the additional Bitcoin I got sitting on the side. So I didn't leverage all of my Bitcoin. I'm keeping some on the sidelines just in case. So hopefully this helps you understand how the strategy works and how you could actually increase your Bitcoin holdings significantly. Let's look at one other thing. So I wanted to go ahead and run this up to the $200,000 range. And at that stage, I will have accumulated 0.005 additional Bitcoin. Just from making that purchase, leveraging my capital. So this is clearly a way to stack sats, and that does not count the additional credits that I have here. I'll be showing another video here later on, because another way that I'm going to leverage this is understanding the percentage increase from whatever you're buying it at and that discount in the marketplace. So right now Bitcoin's at 83K or 85 or whatever, and then you're getting a discount on Bitcoin at these prices. So especially if you deposit at these prices, you get that additional bonus 13%. Well, that means when Bitcoin goes back up above whatever that level would be, so just for simplicity purposes, depositing Bitcoin right now at 80K, getting that 13% in credits. If Bitcoin goes up another 10, we'll call it 15,000, so right back to 100K, that'd be easy. At 100K, I would be able to sell my BTC credits at a higher than marketplace price and exit early and still make a profit. So that's another strategy I'm going to show later, where I'll be able to take some of these credits that I'm getting, and when Bitcoin does get to this 125, 150, whatever range, I will be able to put in 30 and 35% marketplace discounts that can help me get my BTC back or convert it faster by selling at a bigger discount, and I still will be up considerably from where I started due to, again, this opportunity using leverage. So I know that may not make sense because I can't show you the numbers right now, but understand that you can use this to your advantage if you understand how it works. Now, it's definitely not for everybody, and it is very risky. You are, in the case of Ledden, not your keys, not your crypto, and you can pick custody where they don't lend it out to anybody, and they hold it, no reauthentication, but you still have to trust that entity. They do post their reserves for transparency's sake, but you still don't know these guys, they don't know you. And if something happens, who the hell knows, right? So there still is a risk to that. But in order to make yield on your investment, at some stage, you do have to invoke some bit of trust. Even in DeFi platforms where the code is verified, you're trusting everyone else that can read the code better than you, and it's said it's Safu, and it's passed the sniff test on GitHub and all these other things for you to put your capital out there. So there's still some level of trust that inherently goes into these systems, but you can minimize the risk with more truth and transparency. All right, that's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Sprix Finance is a decentralized solution to be your own bank and connect your crypto earnings to real-world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.